What's up, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be doing some stock analysis for Pool Corporation, ticker POOL. So, first thing we're going to look at on my checklist is how are they doing revenue and net income wise. And what we're going to see is that for revenue, they are growing 12% on average, and net income, they are growing 25% on average. And the nice thing here, too, is that the consistency is what I like to look for. And over the last couple decades, they've managed to consistently grow revenue, and same story for net income. So that's what I like to see. In the last recent years, it looks like they're even accelerating even more, which is also great. Then we're going to get to the PE ratio, and what we're going to see is that the stock normally trades at around a 26, and right now we are trading at a forward basis of 22. So I would say it's undervalued from that standpoint. And a couple weeks ago, I started making my position in this. I bought 6 shares at $346. I wouldn't be surprised if the stock, dip back down to 300 or 290 or something. And in that case, then I would buy a couple more shares. But right now, I feel like it's right in that in-between zone where it could shoot up from here or it could fall a little bit. So I'm kind of being careful with that. I wouldn't consider this an innovative company, so I'm not going to give that a check. One of the biggest strong points for this stock, I believe, is their market share, because what this company does is they make pool products for pool retailers. So they don't sell direct to consumer, they sell direct to other businesses. And then the majority of their business, though, is coming from maintenance work and stuff like that. So part of their business model is going to be more discretionary income. And I think that the maintenance part of their business, that's going to be the main driver, and it's going to be very consistent for this type of business. That's what I'm happy to see. Some things people may not spend extra money on for their pool, but simple things like cleaning it, opening it, things that you have to do, that's always going to happen, and this company is going to profit from that. So they have 38% market share in this space, which is huge. I believe they're actually number one, and so that's another reason that I'm bullish. Return on invested capital numbers for this company are fantastic. We're looking at about 35%. You can see here they're pretty consistent with the two, 35% last year, and typically it's above 30%. So that's good. Then we're going to look at their equity. This is where things start to go downhill a little bit. If you count goodwill, which I normally don't, then yes, they are growing equity, but that is where all their growth has come from, because I believe a couple of years ago they did an acquisition. So that's probably what happened there. But if we go to the last couple of years, we're going to see equity has gone from 400 million to 1.2 billion, which looks great, but really that's all in goodwill. As you can see, goodwill appreciated about 800 million, let's say. So that's where I don't always like to count that, because it's not a very tangible number. So I don't love counting equity or love counting goodwill, but it is in there. Then we have, is it over 15% of the market cap? No, unfortunately not, because this is a $12 billion company, and without the goodwill, they don't really have much equity there. Share count decrease, this is always a nice thing to see. We are going to see them decreasing their share count about 2% per year over the last 10 years, so that's always nice. Then we're going to look at, of course, most companies can't hit this, the assets being 2x the liabilities. Most companies can't do that, so that's understandable. Profit margin over 10%, yes. And the nice thing is it's 4x'd in the last 15 years, which is one of the best things you can see, because that means they're getting more efficient, and that means they are getting more profitable. So what you're going to see here is that nearly 15 years ago, let's say, their margins were anywhere from 1% to 3%. Now we're looking at up to 12% profit margins. So that's what I like to see. Cash and receivables are more than the average annual income. It's about what they did for income in the last 2 years or so, but their income has grown so much that the amount of cash and receivables is high relative to that. Healthy dividend, the main thing I'm looking for here is consistency and a nice payout ratio. Payout ratio of 22% is very low, very healthy, so that's going to get a check. The company is over 20 years old. We're looking at a date of 1980 they were founded. And then finally, we have growing free cash flow, averaging 15% growth over the last 10 years. So if we want to look at this chart, we can see that it's not as, I would say the other charts, the revenue chart was probably more attractive, but this is still, from 2002, let's say, to 2018, they really did not grow free cash flow that much. But I like to look at net income and revenue probably more so than free cash flow, because free cash flow can just mean maybe they're investing more money, right? I mean, maybe they're let's see what they're doing with the dividend, right? There's different things that money can be going to. Meanwhile, they are increasing their profit margins, which is important. They have super high return on capital numbers, so it's not like they're getting a less efficient business. And yeah, as you can see, the dividends are growing at average 20% per year. So that probably is that's probably a big factor, right? That's where a lot of their money's going. I mean, that's a great thing to see too, that they're always raising the dividend. So all in all, I am bullish on this stock because I don't really see them having many competitors. I mean, the stock is trading at nearly the same price as it was 3 years ago now. So I wouldn't be surprised if this stock over the next couple of years, has a consistent move up. But I also wouldn't be surprised if this stock, let's say, came down to $270 a share or something. So I don't want to build out a huge position yet. I'm going to wait. But I am going to try to add shares to this account and try to build up that position. So yeah, all in all, I really like this company and I am bullish on this for the long term. Thank you for watching. If you have any other stock recommendations you want me to make a video on, comment down below and I will do that. See you in the next video.